So my name is Velenas Zulu Kangwa. I'm going to take you through the exam techniques for DA1 and CA1.1. So the items that we'll be looking at this afternoon include what ZICA has actually been notified by the team of examiners that the areas where a lot of students usually have challenges, including selecting items to be presented in the financial statements, also the issues of errors that affect the trial balance, the preparation of the statement of cash flows. This one has come out as one of the topical issues amongst a lot of candidates for this paper. We will also talk about common adjustments when preparing the financial statements. And I will also look at other general issues like what you need to do to make sure that you can maximize on the marks by attempting the required number of the questions in the exam, how you can manage your time in the exam, and other general exam preparation techniques. Okay, so from the experience, I think that is the main driving factor that ZICA has, that a lot of candidates for the two papers haven't been performing very well, and hence the deliberate plan by ZICA to put up this program so that the students can be helped. And so we hope that those of you that are here today will be able to get something from this presentation and then manage to go through these two exams without too much struggle. So the very first aspect, which is selecting items to be taken to the financial statements. So the starting point here is us to understand the elements of financial statements. The elements meaning the items that we take to these financial statements. Financial statements that are common in the two papers are the statement of profit or loss, the statement of financial position, the statement of cash flows, as well as the statement of changes in equity. Those are the common financial statements. So assets are items that we are supposed to record in the statement of financial position. And the type of assets we take there are those that have accumulated up to the date of reporting. The expenses are supposed to be taken to the statement of profit or loss. So remember, we have a component there where we say less expenses if you are looking at a sole trader question. So those are the expenses that are supposed to be listed, like wages and salaries, rent, insurance, stationery, depreciation, irrecoverable debts. Those are expenses which should go to the statement of profit or loss. There are some people in the final exam, they will take expenses as items of current assets. They will take current assets as items of expenses. So let's be reminded expenses are an item for the statement of profit or loss. Liabilities, for example, the loans, the trade payables, the accrued expenses, the prepaid income or deferred income, these are items of the statement of financial position. Whatever is available at the date of reporting as a liability, it must go to the statement of financial position. Items of income, they go to the statement of profit or loss. Don't take income to the statement of changes in equity or to the statement of financial position. Incomes such as sales or revenue, discounts received, profit on disposal. These are all items of income that are supposed to sit in the statement of profit or loss. Rent receivable or received. These are all items of income. Don't take them to the statement of financial position. They belong to the statement of profit or loss. And then we have an item of capital. We call it capital for a sole trader as well as partnership. We call it equity if it is referring to limited liability companies. So these are recorded in the statement of financial position. Okay, but also we need to appreciate the fact that any movements in equity or capital will go to the statement of changes in equity. So like when you're dealing with a limited liability company question, if you are told the share capital at the beginning was 1,000, then the company issued new shares during the year to the value of 500. The total there at the end of the year 15, this is the balance carried forward. This one will go to the statement of financial position as a closing equity figure, but the details of what was there at the beginning, the movement during the year, and hence the total at the end, this will appear in the statement of changes in equity. You do this for share capital, share premium, revaluation surplus, retained earnings. Show what is there at the beginning, put the movement if there are transactions affecting those balances, then the closing balances are supposed to be transferred to the statement of financial position. So I just want to show you in this particular example where we have this trial balance. This trial balance has got those components. The components are basically, you know, when we say elements of financial statements, we are not talking about anything away from those 5 elements: income, expense, asset, liability, capital or equity. So every time that you see a trial balance, you just have these 5 items, just those 5 items. And so we need to know that incomes, expenses, all of them are going to go to the profit and loss. Assets, liabilities, all of them are going to go to the statement of financial position. Equity will also go to the statement of financial position, apart from showing the movements in the statement of changes in equity. So for example, in this trial balance, this item, this is capital, meaning it must be taken to the statement of financial position. This is inventory, it's an asset. All assets, they go to the statement of financial position. This is sales, it's an item of income. All incomes should go to the profit and loss. This is purchases, it's an item of expense. All expenses, they go to the profit or loss. This is rates, it's an item of expense. All expenses, they should go to the profit or loss. This is an item of drawing. So drawing is a reversal for capital. It reverses the capital, reduction in capital. This will go to the statement of financial position. Electricity is an expense. All expenses, they should go to the profit or loss. Building is an asset. It should go to the statement of financial position. Accumulated depreciation for building. This is reduction in asset. Reduction in asset. It reduces asset value, meaning it will go to the statement of financial position to reduce that value of the asset. This is receivables. It's an asset. It will go to the statement of financial position. This one is reduction in the same asset of receivable. Again, it will go to the statement of financial position to reduce the asset value. Trade payables is a liability. It will go to the statement of financial position. Cash at bank is an asset. It will go to the statement of financial position. Cash in hand is an asset. It will go to the statement of financial position. This one is an expense. It will go to the profit or loss. This is also an expense. It will go to the profit or loss. So please, if you have a challenge to identify what to take where, your starting point is First, learn. Whenever you see a balance, ask yourself, is this an asset? Is it a liability? Is it equity? Then you should tell yourself, these items all go to the statement of financial position. That's where they get reported. If you ask yourself, is this an expense? And the answer is yes. Is this an income? The answer is yes. Just know that they should be reported in the statement of profit or loss. So please do that to help yourself identify what must go where. So that is this trial balance and the components. The beauty is the majority of the questions in the two papers will actually bring trial balance for different business setups, be it a sole trader, be it a partnership, be it a limited liability company. It could be an incomplete records type of business, which could be either a sole trader, even a limited liability company. So all you need to do is just identify from the bits and pieces in an incomplete records question, identify those bits and pieces. Tell yourself, what's the expense for the year? Okay, what's the general expense in total from the bits and the pieces? What's the wages and salaries figure? So they'll throw one piece of the same expense here in the bank statement to show you how much was paid. Then there's some additional information telling you how much was owing at the end of the year. So when you know how to deal with adjustments again, that will definitely help you get the final figure to take to the statement of profit or loss and how much to take to the statement of financial position. So later, shortly, I will talk about those adjustments. There are some of these adjustments within this question, but I'll come back later for these adjustments after talking about the errors, the issue of errors. So errors have been a topical issue. A lot of candidates for these two papers are struggling to deal with the correct accounting for these errors when they are presented in the question, especially those that cause the trial balance not to balance. So remember, there are two categories of these errors. Those that make the trial balance usually are not a serious problem from a lot of students, but the errors that make the trial balance not to balance, this one have proved to be a challenge. So yeah, it's on record, even from examiner reports here, that candidates struggle to identify which account to debit to credit when an error has occurred. And also they struggle to check which entry should affect the suspense account and which one should not. And also where an error involves the profit already calculated, how to correct the profit. That has also been a serious issue. So these errors that usually cause the trial balance not to balance, there's part omission, part transposition, one-sided entry, undercast involving just one account, overcast involving one account. So when we say part omission, what are we talking about? A transaction has occurred, only one of the two accounts involved is recorded. The other one has not been recorded. I'll give you an example. A business makes a cash sale. So an example for this one, a business makes a cash sale to the value of 1,000 kwacha. So you know the normal double entry is debit, cash, credit, sales. But after being given this transaction, you will then be told that no entry about this transaction has been made in the cash account. So if you know the double entry, normally for this type of a transaction, you will quickly remind yourself that, okay, if no entry has been made in the cash account, it means that what was recorded was only to credit the sales account. This has not been made. Every time you have a part omission error like this one, the easy way to think about the double entry is, think about the account not recorded in double entry, record it, then the other entry, because correction must always take place in a double entry. The other entry has to be the suspense account. So for instance, for this particular one, my journal entry will be debit cash, which was not recorded, and credit suspense. So it's very easy to deal with an omission error where one account is recorded, but the other one no. Simply record the one not recorded. Double entry should go to the suspense account. Part transposition error. A transaction has taken place. One account is correctly recorded, but the other account, to complete the double entry, the amount is transposed, recorded the other way around. So for instance, the same cash sale, let's say the amount involved was 75 kwacha. The amount involved was 78 kwacha. Someone to kindly help me. Is my presentation still showing there?
Yes, it is showing.
Yes, it's showing.
Okay. All right. So I was saying the same cash sale, but the amount involved is 75 kwacha, for example. So instead of debiting both accounts with 75, maybe you debit sales account with 75, which is correct, but then the cash account, you credit sales with 75, but the cash account is debited with 57. So you swap the numbers like that. So what has happened there is that one account is correct, but the other one is not. And this one, which is correct, don't do anything when making the correcting entries. But the one which has a wrong figure, transpose the figure. Check the difference between this and that. That's 18. And this was the debit to the cash account. So what you need to do is to come and add another debit of 18 so that you normalize the total to 75. So when you debit the cash account with 18, meaning the credit will go to the suspense with the same 18. That's on part transposition. You could have made your correction. Then there's the one-sided entry, single entry error. In a single entry error, a transaction has occurred. Either both accounts are debited or both accounts are credited. That's one-sided entry. So I'll use the same example. It's a cash sale for the same 1,000, but instead of debiting cash and crediting sales, you have debited cash and you have debited sales. So if you debit cash with 1,000 and then you debit sales again with 1,000, what's happening is that the debit side of your trial balance will be more by twice the figure, which is 2,000. So to make a correction of this error, leave the account which is correctly recorded. But this one, which is wrongly recorded, debited instead of being credited. For you to make this 1,000 sit on the credit, you need to set ×2 and record on the credit of the sales account as one of the correcting entries, meaning the other correcting entry will be debit suspense with the same 2,000. Okay? Why 2,000? The first 1,000 to remove the amount sitting on the debit. The next 2,000 to make this amount sit on the credit. That is how we make the correction for a single entry, one-sided entry error. Undercast involving one account. Strictly, if an undercast or overcast is involving two accounts, then it is not an error that will affect the trial balance balancing. Strictly, it is only the undercast and overcast that involve one account. Okay? So, for example, this same transaction, a cash sale of 1,000, let's say you debit the cash account with the correct amount, 1,000. As a matter of error, you credit your sales account with, let's say, a 100. So there's an undercast. You have put an amount which is less than the correct figure in one of the accounts involved. How do you make a correction? How do you generate your journal entry for this error? Leave the correctly recorded account alone, but the one that has understated the amount, top up, meaning 900 should come to the credit of the sales account. Double entry, you will debit suspense with the same 900. So this 900 will be credited to the sales account to normalize it to become 1,000. Then you need to debit the suspense account with the same. So your correction must always be in double entry. The same happens with overcast involving one account. So the transaction was 1,000 here. Let's say you debited cash with 1,100 and credited the sales with the correct 1,000. So cash account is overstated. To remove the excess 100 from there, you need to make an opposite entry. So your first entry is that the cash account must be credited. Next, suspense must be debited with the 100. That would have recorded the correction in double entry. So generally, when these errors are committed, the bookkeeper has not adhered to the double entry rules. Either the double entry is not recorded at all, or it has been recorded but with different amounts. And so all you need to do is identify the account which has not recorded the transaction correctly, make a correction in that account, double entry, suspense. Okay. So let's look at this particular example. The question, Dixon recorded an amount of $31.75 for rent and rates paid. Both the rent and rates account and bank account were debited. So there we are. Both the accounts involved were debited. So this is a practical example of a single entry error or one-sided entry error. And the question is saying what would be the journal to correct this error? So journal entry for correction. So ask yourself, between rent and rates account and bank account, which one needs to be debited? So when you make a payment for an expense, you debit the expense account and you credit bank. So if both accounts were debited, it means that the rent and rates was correctly recorded because it requires a debit entry for a payment. It was debited To make a correction now, we are supposed to say credit bank with twice the amount involved. So the twice the amount involved is 6,350. 6,350 because initially bank was debited. So look, bank account was debited 3175, but that should have come here. So the first entry 3175 is to cancel this one. Then the second 3175 is the correct entry, and hence twice this amount is supposed to be recorded there. So credit bank this, meaning you debit suspense with the same amount, 6,350. And hence our answer there, this one. Okay? That's correction of that particular error. There's a question again there. Which of these errors would be disclosed by the trial balance? So sometimes it's just you understanding the theory aspect, not necessarily to make any computation. So A says, a check of 9.5 from C. Smith entered in Smith account and control account as 5.9. So both accounts, the amount that is entered is wrong. Many times for errors affecting the trial balance, what is happening there is that the double entry is not recorded with the same amount, or part of the entries is not actually recorded at all. So this one appears to be transposition, and this transposition has occurred to both accounts that are involved. When you look at B, selling expenses had been debited to sales account. So if you look at selling expenses, they are supposed to be debited to the selling expenses account. They were still debited, but to a different account. So in this case, the sales account. Meaning the account which should have been credited, it's assumed it was correctly credited. So when you make a wrong account be debited or credited, but that is the same entry that should have been made in the correct account, the trial balance does not get affected. See, there is telling us credit sales of 3,000 entered in both double entry accounts as 300. So credit sales of 3,000 entered in both double entry accounts as 300. This is an example of both accounts understated. Both accounts understated. Understated. So when understatement involves the both accounts that are involved, this one is not an issue. This one is not an issue. When you look at D, a purchase of 2,500 was omitted entirely from the books. So when you buy, you are supposed to debit purchases and then credit cash or payable. And this one, it was entirely omitted from the books. So what is happening is that this one is complete omission. Complete omission. So if it's a complete omission, it means that the trial balance will balance. So we come back to each one of them. The TB will balance for this one. This credit sale that was entered in both the double entry as 300. Again, the trial balance is going to balance for this one. When we come to B, selling expenses that had been debited to the sales account. Okay, so there's what we call error of principle. Error of principle tells us that when you make a mistake with
Mrs. Zulu, unmute yourself.
for how long have I been muted?
At the point where we're saying when you make a mistake or so.
Oh, I don't know how it happened. Sorry. I don't know how it happened because I didn't press any muting of myself.
I actually muted as I was trying to mute some other participants that had some running commentaries in the background.
Okay. All right. Okay. So on B, I was saying this is an error of principle, and an error of principle is not an error that will cause the trial balance not to balance. And then A, which is a check of 95 from C, Smith entered in his smooth account and control account as 59. If we may assume that the double entry is between the control account and the sales account. Okay, so remember, credit selling, depending on the system a business uses, double entry could be between the personal account, okay, so sales account and personal account, or sales account and control account. So what we are told in A is that this particular check was entered in both the personal and control account as 59. The fact that it's quiet, okay? So this is a check, and so a check not to the sales account, sorry, but to the cash account. The fact that it's quiet, it's not saying anything. It means that the cash account was correctly recorded, but the control account or personal account was actually not correctly recorded. And so this particular error will cause the trial balance not to balance. Not to balance. So that is a good example again of, it's a practical example of some transposition involving one account. So one account has the correct amount, but the other one is transposed. Talking about errors that affect profit. So all you need to know and appreciate is the statement of profit or loss. Items like sales, they appear there. Purchases, they appear there. Expenses, they appear here. When you talk about issues of, let's say, non-current asset, issues of, let's say, receivables, payables, these they sit in the statement of financial position. So if an error affected a statement of financial position balance like receivables and not a statement of profit or loss balance, just know that that particular error has not affected the calculated profit. So let's say you are told receivables were understated. They are supposed to be 500, but recorded as maybe 400. That will have nothing to do, no effect on the profit calculated. But where you are told the sales account was understated, it means the profit will be understated. To correct, you add the understated amount. If you are told purchases were overstated, it means the profit will be understated. For that, you need to actually add the understated amount to the profit to make a correction. So like here, if the error states that the sale of equipment 70 was wrongly credited to the sales account, so what it means is that sales will be overstated by this 70 and the profit will be overstated. Remember, sales is income. So if income is more, it means the profit that will arise out of there will be too much. So to make a correction, you subtract the 70 from the profit, which has been calculated using an overstated sales figure. If motor expenses of 540 were recorded in motor expenses account as 450, so in short, your expense which has been used to calculate the profit was less by the 90. So if the expense is less, the profit will be overstated. And to make a correction, you need to subtract the 90 from the profit. So that's about that particular one. Okay. So just a few series of some questions on the same errors, since this appears to be a serious matter. So we have this, the trial balance failed to balance by 19,507, a shortage being found on the credit. So whatever the case, the trial balance is more on the debit, more by 19,507, since we are told a shortage being found on the credit. So this credit side of the trial balance is less and the debit is more by this amount. So where it comes to the drawing up of a suspense account, by virtue of the side which is less, that's where the difference must go to sit. So 19,507 here, it has to be placed on the credit of the suspense account. And when we read the sentence, a suspense account was opened to record the difference. After careful examination of the accounting records of the company, the following errors were discovered. So here, rent account had been undercast by this figure. So if you know that rent has a debit balance, what it means is this rent account, whatever the total cost was here on the debit, the amount was less stated by 19,040. So to make a correction, put the 19,040 on the same side where we record rent. Double entry suspense should be credited 19,040. Okay. So this is a practical example of undercast involving one account. So top up on the correct side of that account, double entry suspense. Number 2, sales day book had been undercast by 25,897. So many times in the context in which this undercasting of sales day book is put, it implies the sales account was undercast. Though when you go into a lot of other details, the error may actually mean something. But in the context that in which it is used, it assumes the sales account is actually the one which is understated. So you know that sales account has a balance on the credit. So if it was understated, then the same amount must be put here, 25,897, to normalize the balance, meaning double entry debit suspense, 25,897. Wages account had been overcast So another overcast involving one account. So wages is an expense. When you look at wages, it gets recorded on the debit like this. So if it was overcast, the debit was too much. To make a correction, we need to put the overstated amount on the opposite. So 12,650 will come here. Double entry, it comes here, 12,650, debit suspense. Okay. Sale of computers had been credited to the sales account with 21,350. So you sell a computer, you credit the sales account. So you know that a sales account gets credited. So if it's credited with a wrong transaction, remove it by making a debit entry, 21,350. Double entry, you credit suspense, 21,350, like that. Then sales of 45,450 to B Matthew had been debited to P Matthew account. So when you do that, this one, you again assume that B Matthew and the P Matthew, both of them are customers, meaning this particular balance or error will not affect, this particular error will actually not affect the suspense account. The correcting entries are P Matthew is the wrong person to be debited. So you need to credit P Matthew, then come and debit B Matthew. So that one really does not affect the balancing of the suspense account. It's an error that will cause the trial balance to still balance. Okay. So if we are to look at the profit that was calculated, show the calculations of the profit that was previously calculated before the errors were corrected. So this profit is 97,320. If we look at these errors again, one by one, rent is an expense, and so it was understated. If an expense is understated, it means that this profit was overstated. So we are supposed to say less the amount of rent overstatement, 19,040. So 19,040 will have to be subtracted. If you check the second one, sales account had been undercast, meaning the profit that was calculated was less. So the 25,897 needs to be added. So we add 25, this is 25 what? 897. 897 must be added. If the sales account was understated, it means the calculated profit was less, and so we need to increase it. Next, wages had been overcast. So if wages are overcast, it means the calculated profit was reduced. We need to add the 12,650. And so this one we are adding 12,650. The other one, again, as long as it's a profit and loss item affected, you sell computer, but you credit the sales account, meaning sales were overstated. If sales were overstated, the profit also was overstated by 21,350. We need to reduce it. So there we'll say less 21,350. So the less figure, put them in brackets, it's a good habit. Then the last one, the sale to B Matthew had been debited in P Matthew. This one does not affect any profit and loss item, and hence profit will not be affected in any way. And so you don't do any adjustment for that. So basically that's what we need to consider as far as these errors are concerned. Know the double entry, know which error will go to suspense and which error affects your profit, and make necessary adjustments. Okay, so the next item I'm talking about is a statement of cash flows using the indirect method. This one has been a major problem over the years. Okay, so to start with, we are looking at a format of a statement of cash flows. It has got three headings. The heading number one, cash flows from operating activities. The heading number two, cash flows from investing activities. Then the heading number three, cash flows from financing activities. I can even start with the bottom one. So under cash flows from financing activities, consider what are the sources of finance for the company. So the common sources of finance are issuing shares, acquiring loan notes. So any transactions to do with loan repayment or loan receipt, they must sit under financing activities because that's a source of finance for a limited liability company. Many times when you get a cash flow question, it will give you figures for this year, if it is 2025, and for that year, 2024. So for instance, your loan balance this year is 500. Last year, it was 300. Or it may be the other way, 500, 300. What you do is check the movement. If this year the balance has increased, it means we received loan. It will come here as a cash inflow, the 200. But if last year it was 500 and now it is 300, it means we have repaid a loan amount of 200. It has to come in brackets like this. So two things are possible. Either we contracted more loan or we have repaid part of the loan we had. Any balance for 2024, it entails the opening balance for 2025. Then the 2025 balance is like closing balance for 2025. So you are checking the movement like between the beginning of the year and the end of the year. If it has increased the loan, you received more, it's a cash inflow. It has reduced, you paid out, it's a cash outflow. Another issue you check for financing activities, the movement in share capital. So here, share capital. If you have 1,000 here, it was 800 there. Then the share premium, it is 800 there, it was 500 there. So this total is 1,300. And this total is 1,800. All you need to do is add the share capital, share premium, get the total this year, get the total last year, and check the total movement from here to there. And so from 1,300 to 1,800, we have a 500. And it means we issued more shares, we received more cash. So you are going to say proceeds from the issue of share capital, 500 there. Okay? That's how you get your cash inflow. And at your level, I think on shares, you normally get an issue, not the opposite. Not the opposite, where shares are being bought back. Then dividends paid to the shareholders also is another item that sits under financing. Many times, the dividends paid figure is given in the question. When it's not given, you use a retained earnings account. Put the brought forward, carried forward, the profit for the year. So here, retained earnings. Last year figure put here, then the profit for the year from the profit or loss put there, the carried forward bring here, the missing figure which will be on the debit here, that's dividends paid. And bring it here under financing activities. Talking about items under investing activities. So common items you bring here, when a business acquires PPE, when they sell PPE, the proceed, then interest received, the dividends received. Okay, so the received for interest and the dividends, these are investing items, they sit under investing activities. Then when you purchase non-current assets, whether intangible, tangible, mere investments, you are making an investment. So the cash you pay to purchase comes here. Also, when you sell the same non-current assets, the proceed, it also comes here. Okay? So shortly, we'll be looking at a question so that we see some of these calculations. Finally, under operating activities. So under operating activities, your starting point in the profit and loss statement there, when you say revenue, cost of sales, gross profit, admin, distribution, finance costs, okay? Then next you are at profit before tax. So your starting point is the net profit before tax. You put it there, which you get from the current year statement of profit or loss, the current year, not the previous year. When you get this net profit before tax, think about any expenses included in the cost of sales, admin, distribution, which are non-cash, like depreciation, loss on disposal, or profit on disposal. Those are common ones. You need to reverse them. That's why the method is called indirect. So we start with a profit figure and then adjust it for non-cash items and initially adjust it for non-operating incomes and expenses like finance costs, you know, interest income. Those are non-operating expenses and incomes. So we adjust for those as well as non-cash expenses and incomes. So these are the common items, these: depreciation, loss or profit on disposal. So this one, it was subtracted, we add back. Also, if there was loss on disposal, it's an expense, we add back. But profit on disposal, it was added, we would have to subtract. As well as this investment income represents either interest receivable or dividends receivable, even received. But because they are non-operating items, we reverse them for the sake of getting to this figure, cash generated from operations. So cash generated from operations must be before the non-operating incomes and expenses. That is why we reverse them first of all. So after these are reversed, you have operating profit from working capital changes. This should have been changes. Then bring on board increase in receivables or decrease, then increase in inventory or decrease, then decrease or increase in payables, which are also representative of cash flows from operations. Then you are at your cash generated from operations. Next, that's when you effect the non-operating interest expense, but as a cash flow, meaning the interest paid. So here, when you add back, you are adding back the way it's sitting in the profit or loss. But when you bring it again here to subtract, strictly it must be a cash flow figure. So in an event there are no accruals for the same interest, the same amount you added back, you shall come and subtract. But where the statement of financial position shows accruals for interest, what you add back will be different from what you shall have to subtract here, because you need to do an account. Okay? That account will show it's an interest payable account. Payable. So accrual at the beginning will come here. Accrual at the end will come here. Then the P&L figure will come there. The missing figure now is your cash flow figure. That's the bank. So in the absence of accrual at the beginning, at the end, the same that was charged in the profit and loss becomes the cash flow figure. Okay. So let's see the question on this one. the question. So there's this question, we do just a few figures, so that we can touch many other areas. So the following summarized statements of financial position relate to the business for the year ending 30. Which year is an earlier year and which one is the latter year? Because your movements must be checked in that direction. There are times when I've seen some questions where the latter year is there. 2023, for instance, is there. And the previous is here. So you need to be careful because your movements must start from the previous year to the latter year. So here we are, we have property, plant and equipment and accumulated depreciation. Then, additional information, profit before tax for the year was 7840. So look at this question. It doesn't give you the whole statement of profit or loss, but they are just giving you a sentence to say profit before tax is this figure for the current year. And that's enough for what you require from the statement of profit or loss. That's enough. So your starting point is the profit before tax, profit before tax. This is cash flows from operating activities, So when you start with your 7840 there, you need to think about what you need to adjust for. Is there any depreciation expense? Is there any disposal so that you calculate profit or loss on disposal? And is there any interest, finance costs? So here, when you check the additional information, note 2, during the year to 31st December 2023, some property, plant and equipment which originally cost 1080 had been sold for 240 for cash. The accumulated depreciation on the disposed of PPE was 480. So when you check this note, we are not given the carrying amount of what was disposed, but we are given the cost, we are given the accumulated depreciation of what was disposed of, meaning we can get the carrying amount of what was disposed. It is simply 1080, the cost minus the accumulated 480, which leaves us with a 600. This carrying amount is important for the sake of our account for PPE. So here, when we say PPE, in fact, let me do the PPE working on the other page where the PPE is. So when you say PPE account, the correct way to get the missing figures is to actually use the carrying amount account by virtue of the way PPE items appear in the statement. Either you are given a broken down cost depreciation like this, or you are just given the carrying amount. So the brought forward is the last year figure, this one, 26,720. The carried forward is the current year figure, which is 25,560. Then when I say disposal here, disposal, I need to bring the carrying amount of what was disposed. The other item to come here is depreciation expense. So every time I use the carrying amount account, I must bring depreciation on the credit. Why? The difference between the carrying amount at the end and at the beginning lies in the depreciation besides the disposal. To move from carrying amount at the beginning to carrying amount at the end in the absence of disposal, in between there's depreciation there. That's why we credit depreciation. But when you have used the PPE account with only cost figures, depreciation must not come on the credit. Okay? So apart from these entries that I have made, I need to check under equity, do we have any revaluation surplus? So there's no revaluation surplus. If it was there, I would have checked the movement from last year to this year. If revaluation has increased, it would have come to the debit, the increase. If it decreased, it would have gone to the credit of this account. Because this closing balance goes up by revaluation increase and it goes down by revaluation decrease. And so we need to put those amounts respectively. So in the absence of anything to do with revaluation, one missing figure here is bank for PPE, as well as the depreciation expense. So many times when you do this account, you are trying to find how much cash was paid to acquire PPE, but we still need to get the depreciation expense. Since the depreciation expense is not provided in the details there, we need to use accumulated depreciation account to calculate it, where we put down the brought forward and the carried forward. Here, 4480 is brought forward, 6360 is carried forward. Then the P&L charge will be the missing figure on this account, the balancing figure. Then the depreciation of what was disposed of comes here. And so here we have been given in the note, the depreciation of what was disposed is the 480 there, the 480. So once I put this 480, the missing figure on this account is the depreciation expense for the year, okay? So plus 6360 minus 4480, that gives us with 2360. This figure is very important. It's not only coming here, 2360, but it's also being added back to profit before tax, apart from it being used here to calculate PPE. Okay, so the 2360 plus the 600 carrying amount of what was disposed of, plus the closing balance 25,560, and minus 26,720 there. That leaves us with 18. This is a very important figure for your statement of cash flows. This is also a very important figure for your statement of cash flows. Okay, so 2360 is coming here. You said depreciation expense. 2360. You add back. You add back. Then if I leave some space under investing activities there, investing, two items are ready. One, we have just calculated cash paid to acquire PPE, paid to acquire PPE, which is the 18. We put it in brackets. Then the question gave us the asset was sold for. This one comes as proceed from sale of PPE. Proceed from sale of PPE. This one is a cash inflow. You don't put it in brackets. 240. So two figures are ready. Two figures are ready. Right there under investing activities. Okay. Then after calculating the carrying amount here, we need to check whether the disposal was at a profit or at a loss. So here, to get profit or loss, compare carrying amount with the proceed. So proceed 240, carrying amount 600. 600. So the difference of 360, the difference of 360 there. Since the proceed is less than the carrying amount, this was a loss. And normally this loss would have been included either in cost of sales or admin, which reduced the profit before tax. And so we need to add loss on disposal. Loss on disposal. That 360. These figures are being added to profit before tax. But you don't have to put a plus. I'm just showing you they have to be added because they reduced that profit before tax earlier. Okay. Then fast forward. When you check under current liabilities, there is no accrued interest. Accrued interest is not here. In the absence of accrued interest, it means that the expense for interest, which was expensed in the profit or loss, is the same amount that was paid. And down here, we have been told interest paid during the year, 560. So first of all, I add it back as interest expense because it had been subtracted to arrive at profit before tax. I add it back because it's a non-operating expense, 560. After I do this, and then I do the working capital, inventory increase, receivables, payables increase, decrease, I bring them here. Then later down, I will say now interest paid. So I add back and I come and subtract again. Just like I have to subtract the tax paid, which is a readily available figure, tax charge. Okay, so this one is a charge, not the amount that was paid. So meaning to get the tax that was paid, you need to do a working. So let's check again under liabilities. Always look out for the accrual for taxation. So here, the figures look a little misaligned, but I think this and that are trade payables, and this are tax payable. So I can even do the tax account right here, tax payable account. So the brought forward is the last year tax obligation 1720. Then the carried forward is this year tax obligation 2040. Then what was charged in the profit or loss, which is there in the notes 2480, it must come to increase the obligation. The missing figure between debit and credit, that's your cash flow figure, bank. Okay, so that's 2480 plus the 1720 minus the 2040. This leaves us with a 2160. And so I go to my statement of cash flows there and say my tax paid 2160 there, 2160. These are very important workings. These ones are quite straightforward. The increase, decrease in inventory, those are quite straightforward. Okay? Those are quite straightforward. Let me check the other ones I can calculate. The other ones I can calculate. Okay, so for your increase, decrease in inventory, it's this one. When inventory has increased, so this will be 80, which will be a cash flow. outflow. Receivables, the movement from here to there, which is another increase, it will be another cash outflow. Then, yeah, let me maybe calculate proceeds from the issue of shares. So ordinary shares, share premium. Simply take them together. Take them together. Okay. So like this is like 7,920. This is like 7,280. 7,280. So all I need to do is get the difference. What is 7,920 minus 7,280? Okay, the difference there. So this difference of 640, you take it under proceeds from the issue of shares. That is our proceeds from the issue of shares. So if we look at this heading, financing activities, cash flows from financing activities. When I say proceeds from share issue, proceeds from share issue. Yeah, my figure is 640, it's a cash inflow. Then I check under, if at all there are loans, are there non-current liabilities? So the loans are here. Moved from 10 to 4,000, meaning we repaid the difference is 6,000. It's an outflow. So here I'll just say loans repaid, loans repaid. And so my figure is 6,000. When you repay, it's a cash outflow. Okay? So people, that is how we look at the most important computations from a question statement of cash flows. Make sure you are comfortable with what transactions you record under each of the three important headings. Okay? The three important headings: cash flows from operating activities, what figure you start with, profit before tax, adjust for depreciation, loss or profit on disposal, interest expense, increase, decrease in inventory, receivables, payables. You are at your cash generated from operations. Then interest paid, tax paid. You are done with your operating activities. Investing, you check cash paid to acquire PPE and proceeds from the sale of PPE, then any interest received or dividends received. Then under financing, proceeds from the issue of shares, loans received or repaid, including dividends paid. In fact, in this question, the dividend paid was a readily available figure here. So you needed to just get it from that item number 5 and include it under the investing activities item. Okay. So let me end here on statement of cash flows. Please, when you struggle with any topic, try to do more questions on it. That's my advice. The more questions you attempt on the topic that gives you challenges, you will see how the topic will just unveil itself to you. And then you will say, why did I struggle for this long? You just need to be consistent with the topic. Do 2, 3, 4 questions and see what will happen to you. It's amazing. You will just understand a lot of things that you never understood. Okay? Yeah. So because I'm looking at my time, this is a cash flow multiple choice question, but I'm going to skip it so that I talk about other areas. So the other area where I have been told to talk about the common adjustments in the preparation of financial statements. So these common items or adjustments are irrecoverable debts and allowances for receivables, expense accruals and prepayments, income accruals and prepayments, also called deferred income. Then depreciation expense and accumulated depreciation, closing inventory, some errors, some disposal of non-current assets. Okay? So, if I may start with the last one. If the business disposed of non-current assets, what you need to do is look for the carrying amount. So carrying amount is cost minus depreciation of the asset that was disposed of. Put it there. Then it was disposed of for how much? What was the cash received? Put it there. So if it was 650, so when you sell for more than the carrying amount, the difference 150 is a profit. But if you had sold, let's say for 300, if you had sold for 300, an asset with that carrying amount, you are selling for less than the recorded value. The 200 would be a loss. A loss is an expense. Add it to other expenses in the profit or loss. But a profit, it should reduce your expenses mainly. So that's the adjustment you make. Also remember that when an asset is disposed of, its accumulated depreciation as well as its costs or carrying amount must be removed from the records. And so you need to make sure you make these adjustments. Remove cost or carrying amount from the records, remove the accumulated depreciation of what has been disposed of. Talking about errors, we have already dealt with errors. I don't need to really, talk too much about errors. But when they come as an adjustment, you are given a trial balance, quite all right, which shows maybe purchases 500 and then drawings, maybe let's say 5,000, drawings are 1,000. Then there's a note down which tells you that the proprietor took goods to the value of, let's say, 500 for personal use. And you are told that these goods the owner of the business took have not been recorded. And you have been given this trial balance. So any goods taken by the owner for personal use, they are supposed to be subtracted from purchases, meaning you credit purchases as part of the double entry to make a correction. And then you debit drawings, you come and increase your drawings. And these are the figures you are going to use when preparing your statement of profit or loss, this and this, for purchases and drawings. So usually one error will be thrown into the adjustments for preparing financial statements. Closing inventory. So when you're given closing inventory, always use it when computing cost of sales. Remember, it's opening inventory, purchases, minus closing inventory. Apart from subtracting it to get your cost of sales, also in the statement of financial position, your inventory must appear under current assets inventory. So the inventory in the SFP is closing inventory. Now, another common issue in this exam about inventory. Remember, inventory is guided by IAS 2, which rules that items of inventory should always be valued at the lower of cost and net realizable value. Whichever is lower at any one point, that's what should be used to value inventory. Let me check if this is near. So a question like this one, yes. When inventory has been included at its cost, but when you check its NRV is lower, you need to remove it at its cost and incorporate it at its NRV. Okay? Remove it at its cost, incorporate it at its NRV. So like this question, Makiko counted and valued inventory on this date with a cost of 72,250. This valuation included the slow-moving items, which cost, so included in this figure is an item with a cost of 11,400. These items will be offered for sale at a special price of cost but less 20%, meaning NRV. NRV is basically the selling price minus any cost to sell. So if the selling price is 20% less compared to the cost, we are saying 80% of the cost of 11,400, which is 9120. 9120. So this 9120, that's the NRV. That's the NRV, and it's lower. So what we do now to get the right valuation for this inventory, we will say, let's remove this inventory at its cost 11,400 and come and add the same inventory at its NRV of 9120. That should give us the correct valuation. That, so 72,250 minus the 11,400, you add the 9,120. That will be the correct inventory valuation, which is 69,970. And this adjustment comes in a question requiring you to prepare financial statements, profit or loss statement of financial position. So what it means is that this figure is what shall go as closing inventory in your SFP. Then your computation of cost of sales must also use this for closing inventory and not this. That's what it means. So you can get it as a multiple choice. You can also get it as an adjustment to the financial statements preparation questions. Then other adjustments are here. Depreciation expense and accumulated depreciation. So depreciation expense is the amount by which an asset is going to be reduced every year. Accumulated depreciation is the total depreciation the asset has suffered since it was bought. So this total depreciation or accumulated keeps increasing at the end of each year by the depreciation expense. So like this is what will happen. If the asset is depreciating by, let's say, 10 every year. So year one, this is the accumulated depreciation. It will have 10. Year two, it will have 20. Year three, it will have 30, and so on and so forth. And you keep increasing, you keep crediting it by depreciation expense, you know, every other year, depreciation expense. That's why one of the multiple choice questions you get in your paper is double entry for depreciation expense. So it comes like this: credit accumulated and debit depreciation expense. That's the double entry for this. Now, this one, the 10 every year, goes to the profit or loss as an expense. Then the accumulated total, after accounting for the depreciation expense every year, this is what you shall subtract from the cost of the asset in the statement of financial position. Okay. So for example, let me just take you, we conclude the matter of depreciation. This is a trial balance for Calabar. I'll just take on one. This is the cost of an asset 54 motor vehicles. Then the accumulated depreciation is 18. And this accumulated, you are even reminded that 1st January, the year end is 31st December. So this is at start of the current year. That's the total depreciation the asset has suffered. Then under additional information, straight line depreciation for the year is to be provided as follows. Motor vehicles, 33 and 1/3%. So what it means is when you are told straight line, your percentage must always be applied on the original cost. In this case, it's 54,000. But when you are told reducing balance, so if we were doing reducing balance here, we would apply the percentage on 54 minus 18. Apply the rate on that figure for you to calculate the charge for the year. So the depreciation on this one for the year is 18,000. It's 18,000. So what it means when you apply 33 and 1/3 on the 54, you are getting 18,000. So look at this. In the profit or loss, when you said depreciation for motor vehicles, you shall take the 18, the charge for this year. Then in the statement of financial position, for you to get the carrying amount, you are saying the cost of motor vehicle, 54, minus accumulated depreciation. Now get me clearly, the accumulated so far will be this 18 at the beginning of the current year plus this 18, which is a 36,000. And hence the carrying amount will be what we have there. What we have there, which is the 18, meaning that these motor vehicles have a 3-year life, because when they depreciate for 1 more year, then their value depletes to 0. So people, that's how we make the adjustment for depreciation. The charge for the year goes to the profit or loss as an expense. Then the same charge for the year must be added to the accumulated in the trial balance for you to get the total accumulated to be subtracted from the cost of the asset. Okay? Then the other adjustments, expense accrual and prepayment. So I'll do a quick one on this one. I'm checking my time. So expense accrual, let me use actually the question so that I'm faster. Let me check first. Salaries amounting to 85 were outstanding, meaning they were an accrual. Outstanding, accrual, due is one and the same. So at the end of the year, 85 is owing for salaries. Then when we check in this particular trial balance, we have this item, wages and salaries. So the wages and salaries, which figure is this? I don't know if my, I don't know if it's a 34 or my eyes can see the alignment well. But anyway, what's important is the explanation. If wages and salaries is 34, this, let me say, all expenses that are actually paid for, what you see in the trial balance is what was paid. And in the additional information, when there's an accrual, you add the accrual to the paid. So it's plus 85 to get what shall go to the profit or loss. So the sum of that to go to the profit or loss is 42,500. 42,500. So for expenses as well as incomes, the owing is added to the paid or received for you to get the P&L figure. Then, so this will go to the profit or loss. Then in the statement of financial position, the accrual itself will go as a current liability, 85. So basically this 34, if you like, it's sitting like this in the wages and salaries account. It's their bank because it represents an amount paid. Then when there's an accrual at the end, it comes like this accrual, 85. So that the total now goes to P&L. Then the double entry for this is you credit an account called accrual. So if you credit, it means that this balance is a liability in the statement of financial position. That's where this liability is coming from. So that's for accrual. What about if the expense was prepaid? So here, rent was prepaid by 3/9 for the first 3 months of 2024. So basically at the end of 2023, we have paid in advance for next year, the first 3 months. So when you check the expense rent, so rent expense is here, the amount should be 19.5. So this 19.5 in the rent account, it represents what has been paid, 19.5. But from this paid, we have paid excess. So prepaid, that's why it always comes on the opposite. This is a 3 what? A 3/9. So 3/9. In short, for you to get a P&L figure where there's a prepayment, you always have to subtract it from the amount in the trial balance. That is why it goes to the opposite side of the account. So that 19.5 minus the 3/9 leaves us with a 15.6. 15.6. So a prepayment will reduce the amount paid for you to get the P&L. The accrual should be added to the amount paid for you to get the P&L. And double entry for this prepaid from this account, you can see it will come to the debit of the prepaid account. So this is a prepaid account. And so it sits on the debit and hence it goes as a current asset in the statement of financial position. Okay, so I guess that is some adequate explanation of prepayment and accrual for expenses. When it comes to for income, actually we do the opposite. Irrecoverable debts and allowances. So an irrecoverable debt is an expense. An allowance, when it's created for the first time, automatically it's an expense. But in subsequent years, you need to compare the brought forward and the carried forward. If it has increased, it means that the increase only will be charged as an expense. If it has reduced, the decrease will be a reduction in expenses. That's how you make this particular adjustment. So let me see if we can look at a question. So here at 30th June 2022, a company's allowance for receivables was 39,000. Okay, that's 2022. Now at 30 June 2023. So 30 June 2022 is as good as the 1st July 2022, which is the start of the year ending 30 June 2023. Basically, we are being told an opening allowance of 39, which in the account allowance for receivables sits like this. 39 is sitting like this. It's an opening allowance. Then at 30 June, trade receivables totaled this. It was decided to write off. So if you are told decided to write off, it means this 517 has not already been reduced for this write-off. So there, receivables. It's sitting like this in the account, 517. But now we have to write off. You need to make a credit entry to this account, 37. Then you check what's remaining after the write-off. So the 517 minus the 37, that's a 480,000. And then you are told After writing off 37 of the 517, we need to adjust the allowance for receivables to 5% of the trade receivables based on the past events or past experience. And the question is, what figure should appear in the statement of profit or loss for the year ending 30 June 2023 for receivable expense? So look at this. These closing receivables, we apply a 5%. 5%. Okay? So 5% of that is a 24. That's our closing allowance, 24,000. And indeed, you need to compare that opening balance and the closing balance. And you can see that this, which will go to the profit or loss, will sit on the debit. So the difference between 24 and 39 is a 15. 15 there. And so, irrecoverable date will go as a debit, 37. But the allowance, because it's a reduction, it's going as a 15, as a credit. So the net figure is the difference between those two, which is a 22,000. So to answer the question, the charge to the profit or loss is a 22,000. A debit of recoverable date of 37 and a credit of allowance. So whatever the movement on the allowance, you net it up with a recoverable date. A recoverable date will always be an expense unless there's a recovery. In the absence of that, it's an expense. But for allowance, it's an expense if it has increased in the period. And it's a reduction in an expense if it has decreased in the period. Okay? So, I need to find out from Andrew if I can end here to leave the 1 hour, 30 minutes for questions. Okay,
Yeah,
wow, he's...
Kangwa.
Yes, I need to find out from you if I
How
need...
much do you have pending?
What is pending are the general, yeah, the general tips. I think most of the technical aspects I have covered, but the general tips for the exam.
Okay, maybe what I might suggest is that you take questions on the technical part and then conclude with the general.
Okay, all right. Thank you. Okay, so we have OHIT. We are going into the question session from what I have shared so far. Are we having any questions from any one of us?
Ladies and gentlemen, this is your chance to ask where you have had your doubts. Feel free. Mrs. Kangwa in here will be as candid as possible as she provides you with explanations on areas you may have some questions. Thank you. So I can see in the text part, there's something coming from Mwamba Chileshe. So Mwamba asks, or comments how to treat the advance in brackets prepayment within the operation year, as well as the accruals from the operating year in the profit and loss account.
How to treat the advance as well as the accrual?
Yes, that appears to be the question.
Okay, maybe this candidate missed the explanation because that's what I just explained. I think the last part I explained. So I will just repeat myself while we wait for others to ask the questions. The accrual for an expense is going to be added to the trial balance figure, which represents the expense that has been paid. So the total to go to P&L is usually the paid plus the accrual. But in an event, we have an advance, meaning the payment is well enough in excess of the expense for the period. What we will take to the profit and loss will be the paid from the trial balance, because the trial balance always shows you the paid amount minus the prepaid. So this is how they work. Paid, which is TB, plus accrual. That's what will go to P&L. That's what will go to P&L. So for prepaid, you subtract. And this concept applies to both incomes and expenses. Both incomes and expenses. Okay? The only difference between incomes and expenses is when you take the accrual or prepayment to the statement of financial position. So the prepaid for expenses, they go as a current asset. The accrual for expenses, they go as current liabilities. This is for expenses. But for incomes, the opposite. What goes as current asset for expense must go as a current liability. What goes as current liability for expense must go as current asset. So for instance, accrued income is actually a current asset. Prepaid income or deferred income is a current asset. It's a current liability, sorry, in the statement of financial position. Yeah. Any other question? I hope that answers the question of the previous candidate. If there's anyone with any other question on what I have shared so far, and also on anything else that you think is bubbling within your heart to say, this aspect, every time I come across it, it doesn't make sense to me. You are free to let us know.
I would just love for you to take it back on the depreciation part. Yes, depreciation, I would love you to explain more on that.
Which specific area of depreciation would you like more explanation? Because I looked at depreciation like here in the trial balance, how you calculate what you shall take to profit or loss, and how you get the total to subtract from the cost to get your carrying amount for statement of financial position. But earlier I looked at depreciation from the statement of cash flows. So which area of depreciation do you need me to talk about again?
If it's okay, can go on both on the statement of financial position and cash flow. Just a recap a bit.
Okay. So if we are to look at this other non-current asset here, fixtures and fittings, it has a cost of 66 and accumulated depreciation of 33. Then when you go to additional information, you are told the straight line depreciation to be provided, fixtures and fittings 10%. So when you are told the straight line, meaning this percentage must be applied on the original cost of the asset. So in this trial balance, the original cost of the asset is 66. So what it means is that here, 10% on 66, we have 6,600. This will go as an expense in the profit or loss for the year ending 31st December. So when you do your profit or loss and you say depreciation, it will be this 66. So always the information in the additional notes about how you must depreciate the asset, it has to be used to get your depreciation expense for the year to go to P&L. But for you to record the asset in the statement of financial position, that fixtures. So let me write here. Usually the format of your answer comes like this to say costs, accumulated, depreciation, then carrying amount. So the cost originally is 66, the figure, the way it is in the trial balance. The correct figure for accumulated at the end of this year must always be this depreciation expense added to the accumulated depreciation figure in the trial balance. So this accumulated 33, it will be plus 66, which gives us 39,600. So here, 39,600. So when you subtract the two, you get a carrying amount of 26,400. So 26,400. Carrying amount, others call it net book value. So when you do for asset 1, asset 2, asset 3, you will close the first two columns because what ends up being added are the carrying amounts. And you will do the same thing that I have just explained for the rest of the assets. You will calculate the depreciation for this year, take it as an expense in the profit or loss, add it to the brought forward depreciation in the trial balance, and the total becomes your accumulated depreciation when you do your statement of financial position. Then when I explained on the statement of cash flows, I said depreciation expense should be added to the profit before tax. Added. Now, for you to add the depreciation, some questions will give you the depreciation expense, but some questions won't give you. So when they don't give you from the cash flow topic point of view, cash flow, how do you calculate this depreciation which must be added back when it is not given? So this is where I said you use an accumulated depreciation account. Your brought forward, which will be readily available in the question, put it here. Then the expense, which is a profit or loss, this is what you are looking for. You get it as a balancing figure on this account. Then the closing accumulated, you bring it here, okay? Then the depreciation on what was disposed of must be removed from this account and it will always be debited. So this normally will be available, this available, that available. You are looking for this figure. That's how you calculate depreciation expense for a cash flow question when it is not provided. I hope that answers the question. You may hear from others. Any more questions? Okay, as I'm waiting for you to gather your questions, let me just talk about other issues. Tips on answering multiple choice questions. So multiple choice questions, they have got a limited way in which the learning outcomes are usually tested. If I may even just scroll back, like this question is asking for a rent expense, how much will go to the profit or loss? And the issue here is about accruals and prepayments. This question also is asking for how much will be charged in the profit or loss, and the issue is accruals and prepayments. This question is asking for the total to go to the profit and loss, where there's recoverable debt and allowance. This question is also asking for the total to be taken to the profit or loss, and the issue is accruals and prepayments for income. I can go on and on and on. A lot of computational questions are asking you to calculate how much will go to the statement of financial position or how much will go to the statement of profit or loss from a transaction. So this is what we mean when we say the learning outcomes are the limited way in which the questions will be crafted. So as a student, when you have gone through a number of past exam questions, you'll be able to even pick this for yourself. So the more you practice the multiple choice questions, the more you become very familiar about these limited ways in which the learning outcomes are generally examined. Okay? It's limited, it's no secret. The past question papers are all over your website and everywhere by virtue of the pattern in which past exams have actually been crafted. That is how the majority of the learning outcomes will be crafted. And so all you need is set a little bit more time aside, go through a lot of these past exam questions. You will become very familiar about these limited ways. With 1.8 minutes per mark, so remember the marks in total are 100. Since the total time is 3 hours, so that is calculated as 1.8 minutes per mark. So each 2-mark question, you don't need to spend more than 3.6 minutes for each multiple choice question. So the moment you find yourself spending 5 minutes on one multiple choice question, that's a red flag. What it means is that you are denying yourself an opportunity to attempt other questions where you could not have serious challenges, but you could earn the marks that are there. So every time you are spending too much time on a particular question, just tell yourself, this is a red flag. I'm denying myself an opportunity to attempt other questions which may not be as difficult as this one I'm spending too much time on. So this is why we urge candidates to say, you need to be strict with the time that you spend. A 2 marks question, not more than 3.6. Even when you haven't yet calculated your answer, just move on to the next question. In an event you are lucky you have some time at the end because you were too efficient with some questions, you can come back to that question and any other questions where you failed to get the answer within the 3.6 minutes. So on the whole of section 8, 10 multiple choice questions, don't go over 36 minutes. Don't. When 36 minutes is done, you need to be checking your watch in the exam. Move on to section B, the first question. A 20 marks questions. Don't exceed the 36 minutes. The moment 36 minutes is done on your second question in section B, move on. Leave everything, no matter how affordable what you're leaving looks. Just leave it and move on to the next question. Only come back later at the end of the exam. It's extremely dangerous to spend too much time on one question. Okay? That is why part of the use of the 15 minutes is for you to skim through the questions and even in number them in the order in which you think they are easier to you as an individual. There's no fast and hard rule, how you number them, how you rank them. It's all up to you. Which areas are you very comfortable, not very comfortable? For all theory questions, if you have gone through the topic of that particular theory question, they are very easy and faster to answer. But for computation, it will take you some time, and especially if the area of the computation is something you didn't thoroughly prepare yourself in, then that particular one, you better first skip, go do other things. If, you know, by the grace, you are able to come back before time, you can actually come back. Do not apply the technique only in the final exam. Apply it during practice under exam conditions. Appropriate and careful reading of the question is important. Read the requirement first. For questions requiring calculation, try solving the question before looking at the available options. Some people read the question and they begin to read the answers right away before they try to calculate. That is a wrong approach altogether. Read the question, calculate your own answer, then check if the one you have calculated is amongst the options. Many times, if it is, most likely it's correct. But it's not always that, because what you have calculated is there and then it's the answer. The examiner also puts the answers which are a likely mistake that a candidate will make when trying to arrive at the correct answer to that question. Never leave any multiple choice questions unanswered. There's no negative marking for wrong answer. So in an event, the invigilator says you have 5 minutes before the end of the exam, and then you left 4 or 5 multiple choice questions unanswered. Please quickly rush there and do your guessing. A, C, D, B, A. You never know, out of that, you could get 6 marks. Don't leave multiple choice questions unattempted. That is not acceptable. Okay? No marks are subtracted just because your answer is wrong. So why should you do that? You can also use elimination method in multiple choice. It really helps. General exam preparation tips. Many times there's a poor answer presentation. You are reminded that answers must effectively communicate to the examiners. So those marking you, they are marking a lot of scripts. Many times they are marking with some stress. If your answers are, you know, something they are going to struggle to just make sense of, that is not very good. That is not very good. So make sure that your answers are well presented. Each answer must start on a new page, an answer to a full question. Not that each portion like A, B, C, D, each portion of A, B, C to start on a new page. No, 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 no. but the answer to the full question must start on the new page, numbered nicely. If you are answering A1 or 1A, 1B, number them nicely and they should be very visible. Avoid spending too much time on one question. Ensure you number the answers correctly. The examiner may not see what you answered. Yeah, if you don't do the proper numbering. Ensure you show your workings for section B computational questions. Don't just add and subtract on the calculator and then put the total. Then the examiner won't know the composition of your answer. Number your workings accordingly and signpost them. So what are we saying here? I hope you are preparing your questions, people, even as I'm going through this, so that your questions can still come. So here, if I'm doing a statement of profit or loss, and maybe admin expenses, it had 3 figures. Either I put in brackets this plus that minus this. Or if I don't put in brackets, I must show the working outside. If it was my working number 1 outside the statement, when I bring the total of 250 here, I should say this is coming from working 2 or working 1. So I do my working outside the statement, but I must signposts show that, okay, this figure is coming from my working 1. That is very important. Otherwise, some marks that are due to you may be missed out by the marker because of some disorganization in the presentation of your answer. So be legible, be presentable, let no one struggle to find the figures that are needed for you to earn the marks that you have to earn. So general exam preparation tips: review the examiner reports to learn the common mistakes by the previous candidates. Careful question selection. If not comfortable with a part of a question carrying a lot of marks, kindly check other ones where you are comfortable with components carrying more marks. So look at this. There's this question 2. Part A is asking, let's say, theory questions. Maybe what are the advantages of control accounts? Control accounts. And I have gone through these advantages thoroughly, and I'm so comfortable with them. And this is carrying 4 marks. Then part B is asking me to prepare control accounts and reconciliation. And it's carrying 16 marks. And I'm one person who is not comfortable with this topic. Far from it. I don't even know where to start from preparing a control account and also preparing a reconciliation of control account balance to the list of balances. I have not even attempted to revise anything on the preparation of control accounts and reconciliations, but I'm very good with a theory on the advantages or usage of control accounts, but it's only carrying 4 marks. So people, be careful. How do you sacrifice 16 marks just because you're comfortable with a 4 marks portion of the question? So this one, please, let's take note. Go for a question when you're comfortable with a component which is carrying more marks. And despite you not being too comfortable with a small marks portion, you are likely to get a 50 on that particular question. Ensure to study the whole syllabus. Don't do selective. So like here, because you didn't go through the control accounts topic and the question requires you control accounts. So just because maybe 5 minutes before the exam, your eyes were passing on the uses or purpose of control accounts and that 4 marks, you think you can get it. No. Entire syllabus. So before we go to the exam room, can we make sure that we have gone through the entire syllabus? Literally, this time as you are studying, a copy of the syllabus must be by your side and be ticking as you revise to say, okay, final accounts of sole trader, I'm comfortable. Final account of partnership, comfortable. Final accounts from incomplete records, comfortable. Final accounts from clubs, comfortable. Limited liability, comfortable. Bank reconciliation, comfortable. By this time, from today onwards until your exam date, be studying with a copy of the syllabus and be ticking that here I'm comfortable, here I'm comfortable. And take stock of what you are not comfortable with. Do a lot of questions on that area. Okay? So a few weeks before the examination, embark on exam question practice under timed conditions. And the time is now. Between now and the exam, get the whole question paper and write as if you are in the exam hall. Get the solutions. Zika has done us good. They have put all the questions, all the solutions on the website. Get the solution, mark your own work. But don't be biased when marking just because you are marking your own work. You want to make yourself feel better. No, be objective. Okay? And yeah, talk to yourself about your score. Is this good enough? Does it show that I'll pass the exam? Or does it show that I'm very far from passing this exam? And then make resolutions. It's never too late. Skim through past papers and ensure you are comfortable with commonly examined topics. Reconciliation, control accounts, those they come, they have featured in a lot of questions, meaning that, yeah, you cannot afford to just move on without them. Time management in the exam, always start with the easiest questions and end with the most difficult ones. I think I already explained. If you start with the most difficult, you can even spend 2 hours on that one question. Okay? Like, you know, limited liability, financial statements. It's possible you can spend 2 hours. Meanwhile, you have only 1 hour remaining for you to attempt the remaining 4 questions. That is unfortunate. So start with the easiest. Then you'll be given an opportunity to attempt as many questions as possible. Rank the questions in the order of difficulty, starting with the easiest. Preferably, you do this in the 15 minutes reading time. No need to answer questions in chronological order. Don't say, I must first finish all the components of question 1, and then I move to 2, and then 3, and then 4. If question 4 is the easiest to you, on page 1 of your answer booklet, go and say question 4 and start answering it. When you're done, you can come to any other. Maybe question 3 is the next best one in terms of affordability from me. Then that should be my next question. If the next one is question 2, that will be on my page 3. Okay? If multiple choice I've ranked it last because it gives me problems from my experience, then I'm going to do it as last. The beauty is question 1, when you're told even 2 minutes before it's time up, you can just go and say A, B, C, D, A, B, C, D, A, B, C, D. Just guess. There's no way you can just guess wrong everything. It's not possible. Okay. However, we should endeavor to work out the questions. Unless we're in that crisis, then we should still guess. We have no choice. We are better off guessing than leaving the question unattempted, multiple choice. That should not happen. So allocate time to each question, 36 minutes per 20 marks. Read each question clearly to avoid going back and forth. There are times you start answering, you are not sure what the question has asked you to do. So be focused. That is why a day before the exam, don't sleep on the table. Don't spend sleepless nights. Sleeping on the table, only dozing for 5 minutes in the name of, I have not gone through everything and I want to go through everything. That will make you too tired for the exam on the actual date. And when you are too tired, even the easiest question will be very difficult for you to answer. If at all you arrive at an answer, it will be a wrong one. Why? Your brain is overworked and it's not thinking straight. A simplest question, you will say, you don't know. You just put a wrong answer there, down. So please, a day before the exam, it's time to take adequate rest. So the noblest pleasure is the joy of understanding. When you understand something, you feel very good about yourself. So it's never late between today and your exam date. Make effort to study hard. Even the topic that never made sense to you, make sure that it makes sense to you before that date, because it's so much of pleasure and joy to just understand something. And it gives you confidence to go in the exam. Confidence. Okay? You don't look so worried. Even where there's no one coming behind you, you think someone is chasing you when you have not studied. Because you are too scared. Too scared. So education is the most powerful weapon which you can use to change the world. So you guys, you are preparing for this mantle to change the world by, attaining this education, becoming an accountant of numbers, as well as the explanations and the theory, and making important decisions so that we can make this world a better place to live. This is where the presentation ends. But however, remember, we are still open to the questions. Like I told you, that be preparing the questions so that we can talk about them.
Thank you, Mrs. Kangwa, for that wonderful presentation. I do note that there are some questions.
Okay.
Are you able to read the comments on the side?
I had put my presentation in presentation mode, so
okay.
I'm not currently like viewing those questions. Let me just check. Let me check. Okay, so someone is saying I'm behind on part exchange account. I'll appreciate if you can also comment on it. Okay. I find it difficult when calculating the cost of purchase of PPE on statement of cash flow under investing activities. You explained the first method, which is the carrying amount method. What's the second method? Okay. Under statement of cash flow, I was bit unclear on how to treat finance costs. Okay, let me try to attend to those few first. Let me try to attend to those few. Okay, so someone is saying they were a bit unclear about finance costs for the statement of cash flows. So when you are given finance costs in the profit or loss, let's say this is 600. And then under additional, or rather in the statement of financial position. So if this is the profit or loss for 2023, then you have 2023 and 2022 under current liabilities. So if there's an item, interest accrued, okay? Maybe this is 300 and maybe there it's a 100. How do you deal with this, that, and that in your statement of cash flows? So this is a statement of cash flows. After you say profit before tax, you put your figure there. When you say adjust for, one of the items you are adjusting for is the interest expense. Why am I calling it interest expense? Because what you add back is the figure, whichever figure is sitting in the profit or loss. But down after cash generated from operations, when you say interest paid, it needs to be a cash flow figure. Now, cash flow meaning the actual that was paid. This one comes here on accrual basis. It doesn't represent how much was paid, especially when there's interest accrued here and there. There's no way this is what was actually paid. This is just what was incurred as an expense. This is where you need an account, interest payable account, where the accrual brought forward will come like this. The accrual carried forward will come like this, the 300. Then whatever is sitting in the profit or loss will come like this. The difference between the debit and the credit here, that's bank. So we have 700 minus 300, 400. So here when you say interest paid, it has to come from that working. It's actually a 400. It's a 400. So I want to repeat myself. I said, when there is no this, when these are not there, let me put a red cross. When they are not there, the same amount you add is the same one you shall say less. And this was the exact situation in the question that we looked at today. We were only given how much interest was paid. Remember, there was no full statement of profit or loss. So we had the statement of financial position, but there was no this interest accrued under current liabilities. They are not there in the question that we looked at. Conclusion, the same amount that was paid is the same amount that was expensed. So that is why we add back the same figure and come and subtract the same figure. So that's on this finance cost. Then the other question is someone is asking to say, one way is to do a PPE at carrying amount for you to get cash paid to acquire PPE for investing activity. The other method is to use PPE at cost. So when you use PPE at cost, so let me show you. When you say brought forward, you use the original cost. When you say carried forward, you use the original cost. When you say disposal, you use the cost of what has been disposed of. When you use this approach, no depreciation must be put on the credit. So with just these three, the balancing figure is how much cash was paid to acquire. That's the one you get here. But when you use carrying amount account, your brought forward must be the carrying amount. Your disposal must be the carrying amount. Your carried forward must be the carrying amount, like this. So one difference is that the carrying amount account, you put depreciation expense on the credit so that you get this. The balancing figure between the two, that's your bank, your cash paid to acquire non-current assets. In fact, like when you go back to that same question, so in your own time, even after this, go and try to use this account. It will give you the same cash paid to acquire. So you will use original costs for brought forward, disposal, carried forward, and don't put any depreciation. What we calculated will be the same as what you shall get. Okay? Then the other candidate is asking for part exchange account. Part exchange account is usually not a separate account. So for example, this is a non-current asset account. First of all, you bought maybe some items of plant with a total cost of this. So if these are two different, like maybe even 3 different items of plant, then maybe a year later, you dispose of plant which costs, let's say, 5,000. But when you dispose of an item of plant which costs 5,000, you are disposing it in a part exchange. And a part exchange allowance, maybe it's 2,000. And then you need to pay cash of, let's say, 4,000. Because the total cost of the new asset is 6,000. So what you will do is remove the old asset at 5,000, then come back to incorporate the new asset at 6,000 total, but the entries will be broken down into bank or cash 4, and then part exchange allowance of 2, like this. So many times this part exchange will actually come in the same non-current asset account. But there's a suggestion in some other literature where this part exchange is going to be recorded separately in a part exchange account, meaning the 2,000 component will come in this account to show what the value of the asset was at a time that the asset was disposed of in a part exchange. And to still get the total cost of the asset, you still have to merge this and this. So if anything, a part exchange allowance account is not even supposed to be there because everything makes sense to be recorded just in the non-current asset account. Okay. Just in the non-current asset account. Any more questions? Any more questions? In case I haven't seen a question, your question, kindly, if you could talk about it. Recap on accrual prepayment, calculating disposal proceed. Okay.
Mrs. Kangwa, it looks like we have no further questions.
Yeah.
We can probably conclude at this point. Wish to conclude by thanking you, first of all, for the wonderful presentation.
Hello, I've got one question.
Yes, please go ahead.
But it's not concerning about the presentation, it's just concerning about the docket. I paid, but my docket is not showing the subject I will write. I don't know why. Hello?
Hello, what is your NRC number?
My NRC number is 314188/42/1.
Okay, we'll make a follow-up on your issue. Thank you.
Okay.
Any further inquiries away from the presentation, you can please drop us an email through examinations@zika.co.zm or alternatively call 1982. Thank you. So, like I was saying, I wish to thank you, Mrs. Kangwa, for this wonderful presentation and look forward to similar meetings in the future. And then to the students, thank you for making time. It is our hope that you have learned quite a lot from our presentation or meeting for the day. And we urge you to keep taking advantage of such meetings. You keep taking advantage of such meetings. You attend, you listen to what we have for you. Go beyond this, also use your Q&As on the website, use the chief examiner reports for your feedback. And there are also other videos that are on our website. For those of you that still have other papers that are part of this presentation series, please, like I mentioned, make time and ensure that you are in the meeting by 14 hours. Otherwise, thank you so much.